Welcome back. You're still tuned into Midcap Radar. Well, the other stock on our radar is Gandhar Oil Refinery. Remember, it is a recent listing, listed at a premium and is around those levels. Reported Q3 numbers, which have been decent. The stock, though, is down around 1%. In terms of their margins, it came in at 7.7% versus 7.6% on a sequential basis. There has been a profit growth of 6% as well. We are now joined by Ashlesh Parekh, who is the Joint Managing Director at the company, to decode the numbers and talk about the outlook going forward. Mr. Parekh, good afternoon. Thank you so much for joining us. Well, you know, it's been a decent set that you've done in Q3, and I was looking at the 9-month numbers as well. The 9-month growth has been around 3%. There has been a decline in margins. Can you explain to us what led to this? What is the steady state of margins that you're looking at in FY24 and FY25?
Sure. So if you see performance quarter on quarter, so from Q2 to Q3, we have registered an 11% volume growth, from 64,000 kiloliters to approximately 71,000 kiloliters, in terms of the products that we handle. Our prime focus has been on the personal care healthcare division, where we have multinational customers on board with us. Apart from that, we have seen a robust overseas sale. So our overseas sale, which includes our export volumes, have registered a 23% volume growth, and also the revenue growth accordingly. So going forward also, we anticipate our export volumes, our export revenue, to consistently perform better. And, the going forward, even the margins, we anticipate, or we ensure the margins are at a steady state levels.
So what is that steady state level for the margins?
See, we anticipate the gross margins, the EBITDA margins to be in the range of 7 to 8%.
Okay, 7 to 8% for the margins. Can you also just tell us what percentage of sales are your exports currently? And will it hold at the... Yeah.
Yeah, sorry. So our current, including our Texol, which is our subsidiary, the total export sales is around 63% of the total revenue.
63% is from exports. So how are the export markets performing? I ask because we've been talking about Red Sea issues. We've been talking about freight rates going higher. Is that something which is impacting you as well?
See, Q3 was a better performing quarter for the exports, but obviously there are the Red Sea issue which has been a going concern. But we have communicated the issue to our customers, and customers have accepted the freight hikes. The reasons are very globally known, but slowly and steadily the customers are coming to terms towards it, and they are trying to accept the freight hike, and we're getting a stable order book from our export customers as well.
But how much are the freight hikes by? Just trying to understand, because of freight hikes, have you passed it on to your customers? And if that is the case, do you think that will impact volumes?
I don't think it would impact the volume. The freight hike has been in the range of 20 to 25% on the freight value itself. But, we have been in a position to pass on to our customers. With few of our contracts are on FOB as well. So the freight differential is on the customer. So the customer, have no other option than to bear the freight hikes.
Okay, got that. You also had plans to expand capacities in the overseas market, right? Is that still on course, or are you, putting it on hold for now, considering the situation?
No, it's absolutely on course. We anticipate, to add 100,000 kiloliters in our Taloja facility and around 18,000 kiloliters in our Silvassa facility to fuel our growth expansion.
Okay. So that will take your total capacity to 6 lakh kiloliters, right? Can you give us a sense of when that is coming on stream? And once it does, at peak, what kind of revenues are you looking at, and what is the current capacity utilization?
The current capacity utilization, for the Indian facility is more than 93-94%. We anticipate, the new capacity to be on stream by end of this year. Once it is on stream, the 100,000 kiloliter, we anticipate, to bring it to the full stream in next 3 to 4 years.
Okay, just one final question. What is the kind of capex that you will have to put in to, be able to put this expansion into place?
See, we have already, from the recently concluded IPO, we have raised some amount, from the capex part of it, and we are going to deploy that amount, for the capex expansion in our Silvassa facility. And for Taloja facility, there will be, some small capex which will be done from our internal accruals.
And okay, so internal accruals, but what amount?
It will be in the range of 20 to 25 crores.
Okay. Mr. Parekh, last question before we let you go. I wanted to understand, will margins continue to stay in high single digits? Because your product, it is a little commoditized in nature. How do you plan to scale that up? What will the growth lever for margins be from here on?
See, the endeavor at Gandhar, is to focus on the personal care, healthcare division, which is our largest performance division. I mean, the PHPO division, where we have multi customers on our board with us. We are expanding not only domestically, but in overseas business as well. So, we have few customers, where the orders have started coming in even for our export business. And going forward, we want to expand our footprints with our existing customers and, acquire some new customers as well.
All right, got it. Ashlesh, we'll leave it at that. Thanks a lot for joining us and taking us through the outlook for Gandhar Oil. The stock has pulled back, of course, from the levels that it hit after listing. That was close to 298. So it's at 250 now, but still well above the issue price, like Sonal was mentioning, which was at around 170 rupees. So that is the word coming in from Gandhar Oil. We do need to get into a short break now, but there's lots more news and updates coming up for you in just a bit. Stay with us.